So I recently posted about my trading results between 2020 and 2025, and somebody called me out. And in this video, I'm going to be responding to these criticisms in a healthy, constructive way. Because to be completely honest, calling people out who sell things in the trading industry is something I'm totally for. And I encourage people to ask people for track records and challenge people's performance that they publicly post online. And when somebody posts a payout from a prop firm, I think that it is important that you look at things skeptically and ask questions. It's really important that you as a trader at home make sure that who you are watching actually has verifiable results to back what they are telling you about the markets. Otherwise, you could be spending so much time wasting it watching people who don't actually know what they're doing in the financial markets. Nothing about trading or investing is easy. It's incredibly difficult, and I've dedicated the last almost 10 years of my life to learning this craft. So I post results from my personal portfolio that I started in 2020 publicly. And if you want to go watch the full video, we'll leave the link in the top right hand of the screen right now. If you want to go watch that, you can see all of the performance start to finish. But someone actually called me out about this. So the account itself, I think, is up somewhere around, here it is. The account is up the S&P 500 is up 170% since I started this account 5.5 years ago. I was comparing that to my own results of 270% returns. And someone called me out and they said, well, yes, but you're not showing the risk-adjusted returns. And I scratched my head. I said, you know what? You're actually right. Let's do the study. So this person asked me again, they said, you are not showing your performance. You are merely showing your rate of return. None of this proves whether or not you are in fact beating the S&P 500. Trading performance is risk-adjusted returns. Any idiot can lever up VOO and beat the market. What are your risk stats? Honestly, although this was a pointed question and maybe done so in a little bit of an aggressive or hostile way of asking somebody for this, honestly, it's a good question. And so I did some math on this. I had Grok help me with this, which is the AI that I like to use on Twitter. And so we're going to get into that. But I also do want to just address this part. Any idiot can lever up VOO and beat the market. Yes, this is true, but I've been doing this portfolio through 2020 until now, and there have been some vicious market drops within that. So if I had just levered up VOO and beat the market, that would show in the P&L, it would show in the results, and you would see some really violent swings, which you just do not see in my portfolio. AKA, I'm not using a ton of leverage in what I do. And as I actually showed in this video, you can see my performance during the all-time period does not have any sort of massive drops, right? So if I was levered to the max on like VOO or SPY or TQQs, right? Or just leverage or buying massive call options. If there was huge leverage in my account, then during the downward drops that we saw, you would see massive drawdowns in the account. So I actually did the math on my personal drawdown, and I want to get into it because, someone jumped in on this and they said that loss in a day was nasty for someone selling signals. I always ask him for drawdown or deposit load stats, but he keeps quiet. First of all, I've never seen this person before in my life. Second of all, this, comment about anyone selling signals, I actually think there's nothing wrong with selling your experience in the markets if you can verify it. So without further ado, that's not even a slight because honestly, Warren Buffett, professional traders all around the world, they sell services, they manage money for people. If this is a skill that you've built, you deserve to make money from doing it, whether it be from the markets as well as being able to sell services and market yourself. If that's something you want to do and you have the stats to go it, you have my blessing. Honestly, it's what I do, right? You should do it. If you have the skills to pay the bills, why wouldn't you leverage it up without using actual leverage in the markets and instead leverage the ability to sell some sort of service, product, manage money, do prop firms, whatever you choose to do? I personally prefer to run a signal service where you can see the trades that I'm taking. By the way, here's a natural plug. If you want some details on my trading and you want to see every trade that I'm taking, good or bad, up or down, drawdown or win streak, all of it is linked in the description down below. You can sign up for the VIP service there. Without further ado, let's talk about it. So I responded, I said, I respect the skepticism. The industry needs it. And first and foremost, I stand by this. Again, skepticism, I think, is a good thing in the trading space. There's not enough of it. People take everybody for face value because they love the idea of, Lambo lifestyle and all that nonsense that people buy into very quickly. It's what got most of us into trading initially, but for those who stay long-term, I hope you find content like mine to be refreshing, where we're really talking about the ins and outs of trading. Look, I'm talking about doing better than the S&P 500. I'm not talking about making 10,000% in 5 years. I'm not talking about making 100% per year. I'm talking about making consistent returns over time. I've had a really good stretch in the markets and don't expect to be able to reproduce the same level of returns that I've gotten. To be honest, I've had a really good run in the markets, but I have stuck to a system. I've stayed consistent. I do not accredit all of it to luck. It is definitely a skill game as well as a little bit of luck in markets in general. But I've had a good run and I wanted to go through the risk-adjusted return. So in 2021 through 2022, I went through my worst drawdown period. So again, these two people, they're wanting to know, tell me about how bad it got. And there were some ugly periods. There is no question. I'm not going to shy away from it. In 2021 and 2022, I went through a really painful drawdown. To add insult to injury, I was getting married during this period and prepping for a wedding, and it was really, really hard to go through a significant drawdown while going through a very stressful but exciting part of my personal life. This is Trading 101. Trading goes beyond just the charts. Sometimes you have real what going on in your life, and trading is there too, and it can add stress to what you're doing. Now, I don't take any part of my performance. I'm not making any excuses for the drawdown that I incurred. It was part of my strategy. Every strategy has drawdowns and losing streaks. Every strategy looks stupid at times. My personal life played no role in my drawdown. I'm just telling you that that's the kind of emotional things you have to be able to manage as a trader, is going through real world. Someone significant in your life passes away, you're getting married, something happens, right? You get let go from a job, whatever it is, right? Trading is beyond just the charts. Anyways, in 2021 and 2022, I went through my worst drawdown period. And after my account had reached a local high of $133,595.65 in end of October, I then went into a drawdown period. I had a losing streak where I lost $43,000 on my $133,595.65 account at the time. Now, you may notice that my account has grown considerably since this time. And full transparency, I have consistently deposited to this account throughout the years, except for the last year and a half. The market's been up so much, I've just chosen to keep money on the side. And another personal side note is I purchased a home with my wife, and we are making payments towards the mortgage. So I'm not depositing as much to this account as I once was. But I deposited consistently to this account between the years of 2020 and 2024 up till 2024. So anyways, the returns, however, have they're time-weighted returns. They have nothing to do with deposits and withdrawals from the account. So those returns that I show you, that 270% is time-weighted and has no impact based on deposits and withdrawals. That being said, my worst drawdown, my peak drawdown, happened in 2021, 2022. Some of you guys might even remember. It was a very stressful time, and I was very open about it on social media, which was harder than I expected it to be, because people love to pig pile when you're down. To be completely honest, that is the hardest part of being a content creator, is being transparent about drawdowns when they're happening, because everybody is a genius when you're going through a drawdown. They said, you shouldn't be trading like that. This guy doesn't know what he's doing, etc. Anyways, I went through a 32 to 33% drawdown, peak to trough, because I was down at one point $43,000, which was a pretty considerable, and it might have even gone a little bit, let's just say 35%, right? Just because intraday, maybe there was a spike lower. I'm not exactly sure. But I pulled up my broker statements to find out this statistic. And so I also compared during the run that I had, April, I started my account end of March right into April. The peak drawdown actually occurred during the duration of my account from then till now. It actually occurred from January 3rd in 2022 to October of 2022. So that was the peak drawdown period. And it was, for the S&P 500, about a 25.4% drawdown. So the quick comparison would say, Nick, your drawdown was bigger than the S&P 500's. That is true. But what I did next is I also fed Grok or XAI, whatever you want to call it, I asked Grok, hey, here is my returns and here is my max drawdown. Here's the S&P 500's returns. Here's the S&P 500's max drawdown. How are my risk-adjusted returns? So I also just dropped some pictures of my broker statement where I got these numbers from. So this was my high in end of October. I had my last really profitable month, ended the balance there at 133K or so, 134K, somewhere in there. And that is where that's where the peak before the drawdown occurred. So then I shared this screenshot where my account was, at that time, I had made a profit of $83,241 on the account, right? So let me just get rid of this. So this was the profit there. And then there was I gave back significant profit, gave back 43,000 worth of profit. My profit was only 40,000 at that time or so, which is where I got that stat that I showed you. So I asked Grok about my risk-adjusted returns, and it said that the risk tolerance, it did some considerations. Your drawdown of 32.5% indicates higher volatility than the S&P 500's 25.43% max drawdown. If you're comfortable with this risk, your performance is strong. And just a heads up, this account, when I first created it, was meant to be my higher risk account. Since then, I have dialed back the risk considerably, but during this time, I went through my peak drawdown, like I said, 32.5%. And then we get to the assumptions. Without data on the risk-free rate, which is about a 3 to 4% annual for treasury bills or a portfolio volatility, this is a simplified analysis. The Sharpe or Sortino ratio would require annual returns and standard deviation, but the Kalmar ratio supports your performance. Market context. The S&P 500's 170% returns reflect a strong bull market post-COVID recovery. So this is the environment that we're in. So admittedly, if you really want to poke at my performance, what you could say is you're doing really well. You're outperforming very strongly in a bull market. And while there were bear markets in the period of time, which is where I gave back some of my gains, we have not had a massive recession. So if you really want to poke fun at my returns, what you could do, the stronger argument that somebody who wants to try and poke fun at my returns could actually make would actually be your returns are really good in a bull market, but let's see what they look like in a bear market. That is a stronger argument than saying my performance is not actually outperformance. There's no question that my performance is considerably better than the S&P 500 given the last 5 years where we have had a mostly upward market. There have been some nasty drawdowns in the S&P 500 and some sharp sell-offs during the period of time running this portfolio. But if you wanted to really poke fun at it, you would say, what about when we go into a recession? Will you still be able to hold on to the gains? That is something that is a stronger argument. But the overall market or the simplified answer here, I'll move my screen again. Simple answer is your 270% returns with the 32.5% drawdown offers a better risk-adjusted return than the S&P 500's 170% return with a 25.43% drawdown, as your higher returns outweigh the increased risk. And after I refreshed, I saw this person had more to say. And after reading their message, definitely not coming from a place of constructive conversation or discussion, this person definitely doesn't like me, which is understandable. There are people who don't like me, and you're not going to make everybody like you. It's fine. This person says, we're talking 2025, mate. It's not skepticism, it's facts. You lost 120,000 in days/weeks while it takes you months to recover. Very sketchy. You lost when the S&P 500 and recover the same time. You just buying S&P or what? Cute 16%, by the way, sadly is mediocre for all the trash you sell. So obviously this person, they don't like me, which is fine. But what they're actually referring to is the sell-off that we saw in April of 2025. And I responded, actually, I just realized that I read this wrong, but the point is going to be the same. I thought they said August 5th of last year, where I had a huge sharp drawdown too, of about 10% at the time. That's correct. I experienced a really sharp but brief drawdown slippage period in the August 5th gap down Monday morning. It was no fun. Same thing could be substituted for what happened during the April, right? Of course, that was the tariff announcement. So tariff announcements caused the market to slide substantially. It was also about a 10% drawdown period for me in my personal portfolio at that time. So interestingly, the August sell-off and the April sell-off, I experienced about a 10 to 12% drawdown, somewhere in that neighborhood. Even if it was up to like 13 or 14, I don't think it got that high, as I was pretty cash heavy going into that, but still experienced a drawdown like the market itself. So what I said back is, and this is going to be my last response, because clearly this is not a constructive or positive conversation. This is definitely just a toxic one at this point. But the point still stands for what I'm doing this video for, which is to discuss trading returns and what is reasonable and how to deal with drawdowns, etc. That represented 10 to 12% drawdown on my portfolio, which I was able to recover from in the following weeks or months. 16% in response to their 16%. That's a very good return for me. I understand if you're going for bigger returns, I wish you the best with it. But for me personally, I'm not looking to make huge returns quickly in markets, especially with my account having grown over the years. I'm really after achievable consistency rather than trying to catch, 50% in a year, 60%, 70%. It's great for people who are going for that and they want to take that higher risk. But for me, I'll take the less reward in exchange for significantly less risk. To me, that's what matters. So I just wanted to respond to that because again, this person definitely trying to get under my skin or taunt me. But the problem is there's a graveyard of thousands of trader wannabes who have made fun of me over the years and are no longer even trading. So I understand people have things to say, and it's a little bit of a flex. I've outlived a lot of the haters here because a lot of them end up blowing accounts and moving on from trading and calling it a scam. But for those of us, and I imagine a lot of you guys feel this way if you are watching this far into the video, a lot of us are just after consistency and we don't care about all this noise, and honestly, debating people on the internet is sort of stupid anyways. It's your trading account, it's your returns, it's your personal finances. Do what you will with it. For me, I'm going for lower returns, yes, but lower risk to go with it. And today's video is sponsored by DNA Funded. If you're up to the challenge and you feel that you are ready for funding programs, check out today's video sponsor, DNA Funded. They're currently offering 20% off for their challenges for my subscribers who use the promo code that you see right here, A1T20. They offer payouts in as low as 7 days. They have profit sharing up to 90%, and they offer unlimited trading days on both their 1 and 2 phase challenges. And you can trade over 800 assets with this one firm. So check out DNA Funded if you like. All the information can be found in the description of this video down below. Now, I just want to say that I'm not doing this just because I want to kind of tout how good I am at trading, because although I'm very proud of the results that I've been able to generate and feel that this is a very strong performance, it is true that in a prolonged bear market, which we have not seen in over a decade in the S&P 500, that is something that I am conscious about, that I'm thinking about. How can I further bolster out my portfolio and my performance to account for a possibility that we do enter into a 2-3 year bear market where the S&P 500 drops 40, 50, 60%? Can I survive that drawdown? Well, the quick answer is what I said earlier. I don't use a bunch of leverage in my portfolio. In fact, I use minimal to no leverage in what I do. So that should help. However, there's also some other risks, which are, of course, how much of my portfolio is in higher risk assets, like, for example, high growth, high PE ratio tech stocks, or if I'm using options, right, making sure that I'm not accidentally selling too much premium. I do a lot of option selling with what I do, making sure that I don't over leverage or over risk on accident, right? These are things that I have to kind of really probe my portfolio because I've had an incredible run. The important thing for me to do now in my own performance is to now play defense. The account has grown substantially. I'm not looking to absolutely ramp it up and take more risk from here. I'm actually looking to continue to what I've done in the last 2-3 years, which is slowly further dial back the risk, which might ultimately mean that my returns do not stay at the same pace, which is perfectly fine with me because at the time of recording this, the portfolio is over $1.2 million. I'm feeling really good with my returns. I started this account and have been adding to it. It started at $50,000. I've added considerably over time through deposits and through compounding and returning over and over in my gains. I've not withdrawn from this account. This account is it started as an aggressive growth account, and since then continues to be a portfolio that I, build over time. It is not my only portfolio. There are other accounts that I do other things in, or I'm more or less aggressive in, but this is sort of my nest egg for my social media presence where I've shared this performance publicly. And to be honest, there's one other thing that with this, I may not show this forever because it does bring on a lot of stress. I feel that I have proven myself and to others and to people who matter in the trading space. I sell products, I sell services, and I've backed them with results. The best I know how to do in the social media game, as this is sort of the Wild West when it comes to track records, everybody goes running. I've done my best to be as transparent as I can in the industry. I hope this was helpful. I hope this was a good breakdown, and I hope that it inspires you to do your own kind of considerations of your portfolio, your trading account, whatever. And I wish you happy trading. Thanks for watching. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.